Imagine waking up tomorrow and finding out the government printed trillions again. Oil just hit $100 a barrel, banks are suing regulators, AI is still taking jobs, and billionaires are quietly buying massive amounts of Bitcoin. Sounds crazy? Well, that's literally what's happening right now. And according to market strategist Tom Lee, the so-called crypto winter might already be ending. But the real story? The entire financial system might be changing forever. For months the media kept repeating the same narrative. Crypto is cooling down, but look at what the smart money is doing. Companies like MicroStrategy just bought over $1 billion worth of Bitcoin again. Meanwhile, firms like Bitmine Immersion Technologies are aggressively accumulating Ethereum. Let me translate that. While retail investors panic, institutions are shopping. And historically, that's what happens right before the next bull cycle begins. Something huge just happened that most people missed. The network behind Bitcoin has now mined 20 million coins. Only 1 million BTC remain, and those will take over 100 years to be released. Think about that. There are more millionaires on Earth than remaining Bitcoin. Scarcity, like that. That's how markets create explosive price moves. This is where things get interesting. The government of Bhutan recently moved millions in Bitcoin. Why would a government hold crypto? Because even nations are realizing something. Bitcoin might be digital gold for the internet age, and in a world of sanctions, inflation and debt, neutral assets suddenly look very attractive. Here's the part nobody is talking about. Traditional finance is merging with blockchain, the exchange. Nasdaq has partnered with Payward, the parent company of Kraken. Their goal, link tokenized stocks to DeFi networks. Imagine trading stocks like Apple, Tesla, Nvidia, but on blockchain networks 24 hours a day. That's where finance is heading. At the same time this is happening, AI is exploding. Companies like Meta, Microsoft and Google are spending hundreds of billions building AI data centers. And guess what? AI bots are already trading markets. In China, Gen Z traders are literally letting chatbots make trading decisions. So, the next time your trade fails, just remember, you might be competing against a machine that never sleeps. Now, let's talk geopolitics. Tensions involving Iran have pushed oil toward $100 per barrel. Energy spikes usually trigger inflation, and inflation destroys fiat currencies, which is exactly why investors historically run toward gold, commodities, and now, Bitcoin. Even legendary investor Ray Dalio warns that the global debt system is under pressure. But younger investors, they're choosing something else: digital assets. Another interesting trend: wealthy elites are doing things differently. For example, billionaires like Elon Musk and Mark Zuckerberg have reportedly used cheap mortgages to buy massive properties. Why? Because smart money understands something simple. When inflation rises, debt becomes cheaper over time, and scarce assets become more valuable. For years, regulators fought crypto. Now they're realizing something. They can't stop it. So the U.S. Securities and Exchange Commission and the Commodity Futures Trading Commission have agreed to coordinate crypto rules. Meanwhile, the U.S. government is even discussing making the country the crypto capital of the world. Translation: crypto is moving from the fringe to the financial mainstream. While crypto builds momentum, the economy is acting weird. Inflation is cooling, but oil is rising. Interest rates are high, but markets keep rallying. Meanwhile, AI could eliminate millions of jobs. Some analysts say 75% of workers don't even apply for unemployment benefits when laid off. So, the economic picture is complicated, which is exactly why investors are diversifying. Social media giant Meta just made a quiet but extremely important move. They acquired a viral AI social platform called Moltbook. Now on the surface, that sounds like another tech acquisition, but here's the scary part. This platform isn't designed just for humans. It's designed for AI agents to interact with each other. Let that sink in. Not humans. AI bots. We're entering a world where machines will negotiate deals, run companies, analyze markets, and execute financial transactions. And if millions of AI agents are interacting economically, they need a payment system that works globally, instantly and 24/7, which is exactly what blockchain networks were built for. While big tech builds the future, workers are feeling the shock. Meta is reportedly planning more job cuts as it doubles down on AI development. Translation: companies are replacing expensive humans with machines that don't sleep. Now look at the broader economy. In Canada, the economy lost over 100,000 jobs in just 2 months. That's not a small fluctuation. That's a warning sign. The AI revolution isn't just about cool chatbots. It's about restructuring the entire workforce. Now, let's add geopolitics into the mix. Tensions involving Iran have shaken global energy markets. The country's leadership has threatened to keep the Strait of Hormuz restricted. Why does that matter? Because roughly 20% of the world's oil flows through that tiny corridor. If that pipeline gets disrupted, energy prices explode, inflation rises, and markets panic, which is exactly why investors are starting to hedge with alternative assets like commodities, gold, and increasingly, crypto. While all of this chaos is happening, the tech world is preparing for the next internet upgrade. You've heard of 5G, but researchers are already working on 6G networks, and the jump could be massive. 6G could enable instant machine communication, autonomous cities, real-time AI systems, and trillions of connected devices. That means the future internet won't just connect people. It will connect machines running the economy. And machines need financial rails, which is where crypto projects come into play. One of the most controversial discussions in crypto involves the network behind XRP. Created by Ripple Labs, the technology was designed to move money across borders instantly. Think about the problem banks face today. International transfers can take days, and they often require multiple intermediaries. Ripple's solution? A global liquidity network powered by blockchain. According to Ripple's CEO, Brad Garlinghouse, the next 5 years could make XRP investors very happy. Some researchers even believe global institutions may be quietly building toward a digital settlement network for international finance. Whether XRP becomes the backbone of that system is still debated. But one thing is obvious. The world is digitizing money fast. Now here's the big problem. Investors hate uncertainty. Right now we have geopolitical tension, energy shocks, AI disrupting jobs, central banks fighting inflation, and governments racing to regulate crypto. That's a lot of moving pieces, which is why stock markets often drop during chaos. But historically, those drops are also where the best opportunities appear. The smartest investors understand something simple. Markets move in cycles. Fear creates volatility, but patience creates wealth. When markets shake, the impatient sell, the disciplined accumulate. And right now we're seeing large institutions quietly positioning themselves for the next phase of the digital economy. Look at everything happening at once. AI automation, 6G connectivity, blockchain finance, global geopolitical instability, and digital currencies. These forces are converging into something bigger than any single industry. The next economy could look like this. AI agents negotiating contracts, machines paying each other instantly, tokenized assets trading 24 hours a day, global payments moving through blockchain networks, and traditional banking slowly transforming into digital financial infrastructure. This could lead to a future where Bitcoin becomes digital reserve money, Ethereum becomes financial infrastructure, AI manages portfolios, markets trade 24/7 on blockchain networks. In other words, we may be watching the birth of a new financial system. So, here's the question. If the mini crypto winter is ending, and institutions are quietly accumulating, are we about to see the next massive bull run? Or is the global economy heading towards something much bigger? Drop your thoughts in the comments. And if you want real talk about crypto, markets, and the future of money, hit subscribe, because the next financial revolution is already starting. Peace.